All right, so welcome everyone. मेरे साथ हैं पंकज पांडे sir, and we are here for another market wrap in a special setting this time around because we have Union Budget this time with us. So sir, before we get to what is on everybody's mind, market में एक I think एक swing reaction हम लोगों को मिला. So what is happening there, sir?
So hi, good evening, Vishu. I think this week was very important because a lot of factors were riding on the budget, and we have seen nervousness in the market post budget. But I think on Friday we've seen the market recouping almost on the entire losses. Nifty has closed at a new lifetime high. We have seen mid caps, small caps are gaining 2% this week. And it's not only in Indian markets. What you also see that big markets like US is also sort of seeing sector rotation. So from mega caps, the small caps as a category is sort of doing well. So I think it's a sort of a quite a eventful week from a market swing perspective. But I think overall sense is that the mood of the market has definitely improved, or the sentiments have definitely improved from the budget day. And our overall sense is that we are headed for further new highs of say 25,200 kind of a levels. Support could be 1,000 point below, which is 24,200 kind of a levels. But yes, I think the challenge is what had come up because of the hike in terms of short term, long term. I think the markets have are beyond that now.
Absolutely, sir. And then coming to the topic of the day that's on everybody's mind, Union Budget, sir. What's the outlook on that?
So I'll just try to sort of put some insights into it. So when you look at this was the first budget of the coalition government, so a lot of expectation was riding in terms of there'll be some measures for the middle class. Plus, overall sense was that whether this budget is going to turn populist. There was an expectation that since the FNO or the derivative volumes have gone up, there might be some measures to sort of temper that. I think some of these expectations have sort of come true. So, for example, we've seen that the taxation on the FNO segment has sort of gone up. But I think the core philosophy of the budget remains intact. The core philosophy of the government in the past few years have been is fiscal prudence, capital expenditure, and that leading to sustained growth. So I think there is absolutely no change there. The other thing is that overall the element of populism in the budget is quite low. So that is another positive. So this was a big expectation that since it's a coalition government, probably they'll have to do something. But largely, they have not really budged or they have not given any kind of a headroom from that perspective. And I think the numbers which have come out in terms of arithmetic of the budget is absolutely good. What you're sort of chasing is a fiscal deficit of nearly 4.5%. You see a massive drop, say from 6.7% from FY22 kind of a levels. And that's very good and extremely important also because what you're looking at is that you're looking to sort of pull down the debt to GDP ratio further below 50%, which means that you can do this kind of a capex on a sustained basis besides pressurizing the balance sheet of the government. I think one key highlight was the job creation. So I think that is one element which has not been there in the previous budget. And outlay of 2 lakh was quite significant. So what the government is looking to do is that offer stipend of say 5,000 rupees per month for anyone who's working in top 100 companies. Basically, just to sort of when you're working in some of these top corporates, your skills levels obviously goes up because you get exposed to a lot of processes plus the overall thought process or the way of working. So that is a sort of a very softer skill one sort of develops. Similarly, ITIs are extremely important. The government has allocated 30,000 odd crores because there is enormous demand for electricians, plumbers, technicians, a lot of technical people. So I think the government is really sort of focusing on key areas. And on top of it, I think the outlay for capex has been maintained. We need to understand that we have already passed 4 months into this year, nothing much has happened. So if we are keeping the outlay intact, Largely, this means that the capex intensity has been sort of maintained, and I think there's some relief to the middle class in terms of lower taxation, in terms of tax slabs being tweaked, plus standard deduction sort of going up. Our sense is that if someone is earning say 15.5 lakh rupees, the benefit which accrues is about 18,200. So all these are positives of the budget. Now, when you sort of look at the negatives, obviously, from a stock market perspective, the short-term and long-term capital gain taxes have gone up, and this was taken negatively. And I think because there is an expectation that somewhere down the line it is going to disturb the momentum, and it did impact the market during the budget day and the day after. But I think people are, or our sense is that structurally the government has not done anything which deteriorates the overall outlook. So while this is negative for certain section or pockets of the economy, but it is definitely not a showstopper, and which is why I feel that the uptrend or the buoyancy in the market is remaining intact, and which is why I think market realized that. And probably Friday we've seen one of the biggest bounce back across caps. And I think overall sense is that government is quite conservative in terms of their arithmetic also. So it is quite possible that they might be able to beat this number and deliver far more better. I think sectorally, not much being there because what the government is going to come up with is a lot of individual measures for sector. So, for example, for auto FAME, he was expected to be announced. I think that will sort of come. Then the shipping ministry already announced that there'll be shipbuilding policies which they'll come up with. So a lot of sectoral measures are going to come through. So, and mind you, budget is no longer exercise where you get all the economic news or economic developments. I think these developments keep on happening and keep on. The government keeps on pushing this as and when they sort of become ready. So it's budget is not the only document or only event where things happen. So I think overall budget structurally is very good, though was the dampener for some section of the society. But I think it does improve the economic durability or growth prospects of the economy. So which is why markets have taken it in their positive side.
Right, sir. Sir, I think there was some positive news for MSMEs as well in this budget.
Absolutely. So MSMEs has been one segment which the government has been sort of focusing on. I think one concern with MSCs is that they really do not get much access to the credit because they really do not have the balance sheet to sort of support. What the government is proposing is that a loan guarantee or a credit guarantee kind of a scheme where MSMEs can get funds for purchasing, say, machinery and equipment, and without collateral. And government will be putting up a credit guarantee sort of a fund, which is going to sort of help or provide guarantee in case of distress. And I think the Mudra loan account also amount has been sort of doubled to sort of 20 lakhs. And they're also sort of nudging banks to sort of look at measures or look at other variables. So typically when the bank lends, they would look at their P&L balance sheet and all of it. I think these are historical parameters to sort of lend. What they are now asking is that you look at whether they are paying to their salaries or the PFO contributions or electricity bill or some other metrics. So that way, I think somewhere down the line, MSME being a very important segment of the economy, I think is getting its due attention.
Absolutely, sir. So coming to other highlights of this week, I think RBI also announced something about some draft guidelines have come regarding the liquidity coverage ratio. What does that entail, and what will be the impact of that, sir?
So our sense is that impact could be about up to 2% in terms of profit impact for some of the banks. But yes, I think still needs to be worked out. So what RBI is looking or proposing is that see a lot of deposits get raised electronically, or even if they're raised physically, it can be withdrawn electronically because people do have access to their bank accounts through mobile. And that poses some risk because of if there is an excess withdrawal, so obviously it will, banks could face some challenges. Now, there is some stable portion of it and there is some unstable portion of this deposit. and which is why the RBI has increased that by 5% both. So from that perspective, banks will have to keep some more liquidity in terms of G-Secs in case the deposit withdrawal sort of happens, so that they really do not run the liquidity mismatch. And obviously, when you're keeping excess deposits or in terms of securities for liquidity, then it will have some implications because you will not be able to earn much on that money. And it will obviously have some implication in terms of margins. Early days, but our sense is the impact is not going to be a significant one. And again, it's a structural positive. Basically, you're looking to sort of strengthen the bank from all the sides, and which is why I would not really take this as a much negative for the banks.
Absolutely, sir. So there were also some results in that has come in the banking space and in general finance space. I think the big news included Axis has given its result, and then we have Bajaj Finance that came up with results this week. So what was there, sir?
So I'll come very quickly on these results. So if you look at whether it is HDFC Bank, which had come last week, or you look at Kotak Bank, now Axis Bank, or even Bajaj Finance, I think one clear picture, which is clearly emerging, is there is some bit of a little stress in the unsecured portfolio, which is your personal loans or credit card, or typically the ticket sizes which are sort of below 50,000. And that has sort of subdued the sentiment for private banks, especially because what is happening is that there is a slight stress in these smaller pockets or smaller segments, which has led to higher credit costs for most of them. And we all know that they are also already grappling with the fact that the credit growth is, while it is good, but the deposit growth is still lagging. So there is a pressure on margins. So somewhere down the line, most of the banks have sort of disappointed or are struggling on this front, and which is why you don't really see the price performance in most of the private sector banks. Axis Bank probably was slightly worse, so that way the stock witnessed decent amount of correction, which is why we have put a rating of hold. And Bajaj Finance also was no exception to this. So while there was a good growth in the AUM of 31%, but then again, they are also seeing some stress in some of these accounts, and which is why higher credit cost led to lower profits more than the AUM growth of 31%. So from that perspective, even Bajaj Finance also is facing a similar sort of a challenge. And possibly things might improve going forward, but at least probably we might see some instances of this even in next quarter as well.
Absolutely, sir. So some of the other results that were this week, if I have to say, I think there was L&T, there was Tech Mahindra, Mahindra Lifespace, and Kajaria, I think. Any great updates, highlights there, sir?
So L&T also highlighted that when you look at their numbers, while the numbers were good, I think overall when you look at their order inflow was 8%, largely because one, globally there is a bit of a lesser capex intensity on the hydrocarbon as a segment, and this being an election year, obviously in election year domestically 3-4 months actually the activity sort of slows down a bit, and that was clearly reflected in the even the numbers of L&T. But I think what is positive in terms of key takeaway is that the company has been maintaining that guidance for this FY25, both in terms of revenue growth and in terms of margins. Working capital side also, they've done a pretty good job in terms of, so last year working capital requirement was somewhere about 17%. This has come down to 14%. And order inflow or order pipeline is largely intact. It looks lesser compared to what they've announced, but we also need to understand that when you are in an election year, typically the decision-making process sort of slows down. So nothing much to complain from the L&T's number, which is why we are keeping buy with a target price of 4,300. I think Kajaria also witnessed a similar challenge. So while they are saying that the volume growth is going to be in double digits, but then again, Q1 gets impacted because of the factors leading or emanating from election-related slowdown, what you see. But things are expected to pick up. So overall sense is that the story remains intact. Margins are going to improve from, say, 15% to 17% because gas prices are lower. Volume growth, which was in single digits, should improve to low double digits going forward. Which is why, despite this quarter being soft, we are maintaining the overall bullish bias in the stock. We already know that the real estate as a segment is already sort of doing well, and demand for home building products like tiles is going to pick up. So from that perspective, it is just a temporary or a slowdown or slower sales being witnessed because of the election.
Absolutely. And from the house of Mahindra, we had Tech Mahindra and Mahindra Lifespace.
So Tech Mahindra is in a repair mode, and I think numbers were on expected lines. When you look at quarter on quarter, they've grown at a 0.7% quarter on quarter, Q on Q. So Mahindra, I think the top line is not an issue. The focus, key thing to focus is on the margins. Margins had gone down to mid single digits. Now margins have improved to 8.5%. I mean, quarter on quarter, we have seen 100 bps kind of improvement in margins. And then I think overall sense is that next 2 years, the company is going to be in a repair mode, because mind you, any tech company makes margins in terms of high teens. So this company is still way behind. And our sense is that with new management in place, this was the first quarter and they've sort of delivered on expected lines. So our sense is that they should be able to attain lower teen kind of a margin going forward, and that and sort of normalize the company. I think the core segment, which is your communication has been the biggest segment that is still sort of struggling. But I think somewhere down the line, you are going to see this company delivering more balanced growth, and which is why the other segments are going to do well, which is what has happened in this particular quarter. So nothing to complain in Tech Mahindra results. Repair mode is on in this particular company.
Absolutely, sir. And finally, sir, final segment of the week, which is our weekly hidden gem. What will it be this time?
So I already highlighted that a lot of banks are struggling in terms of growth rate plus some bit of uptick on credit cost. I think there's one exception which we have seen up till now, which is Federal Bank. Here, our target price is 230, which is why we are recommending also. See, last quarter was pretty good for them. The advances growth was 20%. The deposit growth was also pretty good at 19 odd percent. And I think you have a new management in place. So I think all that worries are also sort of behind us. Mr. Manian comes from Kotak Mahindra Bank. So overall sense is that this bank is in a pretty good hands. And overall growth is expected to be sort of maintained. Then I think asset quality is expected to be stable for this company. And I think ROAs are expected to further improve from 1.1 to 1.2 to 1.35%. Valuation looks okay, and which is why we feel that while the stock has done well in the recent past, we would want to believe that it will continue to sort of do further with new management in place. So which is why we are maintained a buy with a target price of 230, and which is why I'm recommending this stock as a hidden gem as well.
Amazing, sir. Thank you so much for that, sir. Thank you everyone for watching us. We'll be back next week with Pankaj sir for another weekly wrap. That's all for this week.
Thank you so much.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.